Hi, everyone. How's it going? This is John DeRelay, Head of Revenue Management at Wheelhouse, and I'm joined by Doug Truitt, Head of Commercial at Romy.
Hey
Say hi,
everybody,
Doug.
how's it
How
going,
you all
guys?
doing? Pleasure to be chatting with you guys again. Doug and I are going to do another session of our Rev Bytes. I'm going to call it session two because we kind of restarted it, but it's really like, you
Yeah.
know, quite a bit more down there. And we have some great articles for you today. Doug, let me just make sure. Am I sharing the correct screen? Do you see our faces or these articles here?
I do see it. I see the US July overview.
Perfect. So yeah, we chose a couple great articles that I think are kind of interesting. It's the end of the summer, just past Labor Day. Most people are getting out of their high season. And we just wanted to talk about some of the things we've been seeing in the industry. Nothing as cool as like Taylor Swift reporting from our last episode, but we've got a couple great things here. Before we jump in, any thoughts or anything you want to mention, Doug?
No, not really. Just you said Taylor Swift, and it just is so much fun, anyways, in general. But that's another session to talk about again.
Yeah, 100%. So the four articles we've got for you today are we have KeyData's July overview in 2023. So it's September 8th right now. The August ones aren't out yet. So we figured we'll trail a little bit and talk about July. We can also bring in some of our thoughts in August. We both manage some portfolios ourselves. We thought it would be a good idea to contrast this with the Airdna July report. So we've got
Quite a
two reports
contrast.
from two, yeah, very interesting. We'll see what both of these data providers have to say. And then we got a couple other articles for you. We have a Phocuswire article about Airbnb's growth this year, which I think is pretty interesting, particularly considering last time we talked a lot about the Airbnb bust news that was in the news.
Yeah,
This
yeah.
is going to give us a perspective from the financials of Airbnb itself. So really good. And then we just got this little article that was in more mainstream news media, Business Insider, just talking about the kind of homes that are struggling on the booking platforms right now. So a bunch of good stuff, I think. So we're going to start out with this key data one. Doug, what was standing out to you today when you're reading
I
it?
think what was standing out to me is on this one was we talked about key data. I guess one thing I wanted to say about this key data report is usually they do a month review for the US and they usually get it out somewhere between like the late end of the second week or beginning of the third week. This one came out a little later than usual, but they usually do have it come out pretty consistently at that same time. So, but I think the big components of this one that stood out to me is almost kind of what you and I were talking about last session, which was price sensitivity. People kind of shopping around, spending more time, doing more due diligence to figure out the right place they're going to spend their money on. And it's interesting that it kind of like we were talking about that, and it actually materialized in this article with that. I mean, the declining vacation rental performance, the occupancy rates. I think the average daily rate was hurting a little bit too. And then obviously the RevPAR decline, and then also some of the interesting trends and factors down below to consider, which I really like that bottom section for the trends to keep an eye on. They actually mentioned some interesting stuff in there about marketing. But yeah, we can get your opinion on things too. Let's start back at the top if you want it as well.
Yeah, I'm going to agree with Doug. I think the most interesting things for us to talk about are probably at the bottom there. I really like that Key Data does this kind of more macro perspective that they link in and talk about some of these bigger trends. To be perfectly honest, in terms of the data that they're showing us this time, it's like if we took the numbers off, it's probably going to be similar to last year. Some of the trends are pretty similar. That makes sense based on kind of what we were seeing in June. Uh, Overall occupancy in the United States is down year over year, but still above 2019 levels, which is pretty good.
Yeah.
We're seeing ADRs also suffer a bit. So they do a good job of giving us these big, kind of aggregates year over year. This dark line here, being 2023, so below the last 2 years, but above 2019 pre-COVID. That story is mostly the same on the ADR situation, although we're not quite as far below. I think this is an interesting thing to note because occupancy's gone down a lot more. What's unknown is if how much of the occupancy loss can be attributed to really holding the rate. We really haven't dropped the rates the way that
Yeah.
occupancy is dropped, and occupancy, in a way, is reacting to price. The other component of that, though, which I don't know how to peel out, is we should expect the prices to be higher than 2019. There's been a lot of inflation in the marketplace. So even if like the demand is harder for a lot of PMs, the prices really
Still
should
should
be
be higher.
higher. Like if the
Yeah.
prices were like in a way, if we're like static to 2021, we're actually lower, right? Because that means we're not absorbing the inflation into our rates the way
Right.
that other parts of the economy have been. So that's kind of interesting. I think we'll probably continue to see that trend, which is through the rest of the year, probably weaker occupancies, but I wouldn't be surprised if we see the occupancy not be as weak, but the rates actually start to drop much more precipitously as people
Yeah.
try to capture their market share and actually react earlier than they have been.
Well, and some of the occupancy piece too, consideration you said there is a compounding factors in theory, right? So you have stubbornness as an assumption, but you also have supply as a potential contributor too. The supply going up with the stubbornness just compounds it and makes the occupancy fall out even more. But like to echo what you're saying, I think folks are having some of those aha moments from the summer, from July, and even probably more so in August, and some of those, below the midline of the U.S., where they're probably going, okay, I get it, I got to drop rates, and they're going to start doing it. So occupancy may come back up, but the ADR dilution will probably continue. And if when we get to that other article later, if Airbnb and other channels are still really focused on supply and pushing it, that also is a beast to be reckoned with too.
Yeah, that supply question is really interesting. You'll see this when we talk between AirDNA and KeyData. There's definitely a difference in mood.
Mm,
KeyData is definitely giving us a much more reserved, not bleak, but it's a like buckle your seatbelt kind of
yeah.
perspective. It's like things are getting tougher, like tighten the belt. AirDNA doesn't really do that. They do a lot of looking at it seems like the top end growth. And the truth is that like supply has grown a lot, which for the PM is making it more competitive for us. The other thing to note, though, is aggregate demand is also increasing substantially. So it's not that people are traveling less, it's that in some cases supply is outstripping it. In some cases, people are willing to travel elsewhere,
Hmm.
or at different times, and they're more price sensitive. So both can be true at the same time, I guess. But for the PM, I think I really like this key data perspective because it's kind of telling us some things that we know. Occupancy's down, people have been holding rates too high. That right there informs potential strategy adjustments in the future. And kind of anecdotally, among all the people I talked to who are working with Wheelhouse, a lot of people who have taken more conservative kind of viewpoints, I think, are seeing quite a bit of success in the fall. They're a lot less concerned this fall. They've already accepted that it might be a down market, and they've already kind of flipped that script. Instead of panicking, they're like, well, I put on a lot of occupancy.
Yeah.
Rates are lower, but I may even be pacing ahead in occupancy, and the hope is I might be able to make up some of that RevPAR or even do better by selling more.
Well, and you said it before too, like, if you leave, I can't remember the exact quote you said, but if you leave occupancy on the table, that's the worst thing you can do. So being too stubborn and not getting anything is worse than something.
Yeah, occupancy is always worth more than ADR when there's vacancy.
Yes, that's
Yeah.
the one I was looking for.
Um, so they're going to give us a little bit of an analysis here of, the each of the KPIs. They're really worth the read. I'm not going to read it to you though. One
Yeah.
thing one thing we both really like about the key data stuff is this regional breakdown.
Regional, yeah.
It's pretty interesting in my opinion. Um, Particularly because we're looking at the last month and looking at that change. And so as we know, they mention in here that Hawaii is actually getting pretty, their occupancies are down the most. And I think that, considering what happened in Maui this month, that's probably going to continue pretty rough over there. So
Yeah.
those property managers really need to, they have a difficult strategy question, is they get closer to a high season that's kind of offset from other seasonalities, in the country. I
Yeah.
think they have an odd one, right? It's like kind of like late fall, winter, like Christmas especially, but then it's like also the spring, I think, is kind of their high season. It's a little
Hmm.
bit, it's not like any other market really. And so for that Christmas season, you might be inclined to start reacting now, but you don't really want to give away too much.
Too much, yeah.
We'll talk about this later too. There's a lot of changes going on in the airline prices right now. And it's
That's
really
having a
hard to
ripple
understand
effect.
how, yeah, anyone who's got a high season coming up, it's really hard to understand how that's going to affect us because they might have a little bit more money than they would have had to book earlier than people who were
Hmm.
looking 6 months ago for the summer, you know?
Yep. I agree. I think we talked about that before, how the, you know, the accommodation side of travel tends to be kind of at the last piece of the ripple in the pond with stuff happening. So it's kind of like when the airlines move and do slight movements, sometimes it has a bigger ripple effect for us down on the accommodation side. I mean, I know personally, I don't know about you, John, but I think you and I were talking about it at lunch the other day, and I bought my flights for Verma in October, and it was like from Spokane, Washington to Orlando, Florida. It was like $700 for a round trip ticket. Whereas I had been to Florida probably about 3, 4 months ago. I know it was a little different season, but it was like all close to twice that.
Yeah,
So it's like there definitely is a feeling of like things have come down, just personally for what I've seen.
I definitely agree. I'm actually going to put us over here so you can see us talking too. Hey guys,
Hey.
it's Doug and John over here. Um, that way you can see us laughing, I guess. I'm in the same boat with you, Doug. I went on a couple trips recently too, and I was pretty surprised by the prices because when I traveled in the spring, I was like, man, everything was so expensive. And then I think I just went to San Francisco. It was like $200.
That's crazy. Well, and there's something to be said about that feeling, right?
Hmm.
That gut feeling that as a consumer, you're like, this should be higher. That means you've been kind of conditionalized to think that those rates should have been higher. So now that they're not as high, maybe that plays a contributor into demand as well. It's like, oh, well, they're cheaper. Hey, maybe we should go on another trip. Maybe we should go do another thing. Like it influences some of those things that then helps the accommodation side on the ripple down when the flights come down. So that's really good.
I think so too. I think that if people, I think a bunch of people may have put off their summer travel. We're already seeing some movement in the fall. Airdna will talk about this as well. Um, and if some of our hunches about like people need having tighter books and looking to be more flexible are true, just immediately just seeing cheaper airline prices potentially reopens people to going locations that they wanted to go, higher tier locations,
Yep.
higher tier properties. Um, I think it's actually going to be really hard to plan for a revenue manager. My suggestion would still probably to be conservative and highly reactive
Yep.
because it's hard to know exactly what will happen. And if you plan for the more aggressive route and you're wrong, it could
Yeah.
be really problematic for you. Because
Yeah.
at the end of the day, as we'll talk about at the end, there's still going to be vacancy in all these markets. Now, those properties may not be very good, but they're going to be competing with you.
Yeah. Well, and remember on the last session, we talked about one of the things that came out of KeyData and one of the other ones too is that a lot of people were inclined that if the location they were initially looking for didn't align with what they wanted in price, they went and looked for another location. So they didn't let
Mhm.
it stop their travel plans. So that could get compounded with flights going down in price, where it's just like maybe they go from one place to two place to three place before they find something. They're like, I'm going to spend.
Yeah,
So,
totally. Now, what's also interesting to me, I'm just going to note this because it'll be relevant later. We talked about it last time, Arizona,
Southwest. Yeah.
Southwest
I
getting
saw that too. That was
pretty,
huge.
they're getting hit pretty hard, both occupancy and ADR. Um, I think that kind of makes sense. I'm not sure about California, but I know in like Arizona, it's a tough time to do stuff. So
Yeah.
just want to note that that's kind of an interesting, you know, and I don't anticipate that changing until we start getting into that next high season for them.
Yeah.
So we'll kind of see what happens there. Yeah, there you go. That's the big one,
Yeah.
right?
That's what I was to say.
I mean,
That
this
was
is
a big
this
one.
is a big indicator at a high level that your pricing strategy at a market level is really not right. When your ADRs are like what is this is 3x your
Mm-hmm.
RevPAR, you're not pricing correctly in the market.
No.
Like this market is not optimized to the consumer at all. You should not have an adjustment like that. It's not quite right, you know.
Yeah.
We see kind of
One could say
or
that stubbornness in a sense.
yeah, it's there's definitely a disjunct there that doesn't quite make sense. You know what I mean?
Yep.
Like we work in an urban environment. And it's like, oh, RevPARs are one bedroom RevPARs, but ADRs are three bedroom ADRs. You know what I mean?
Yeah.
Um, Man, New England killed it on ADR
Only
uh
3% down too.
this summer. Yeah, and those are high values. I've been working with some folks up there. Very short season.
Yeah. I,
Um, Go ahead, Doug.
I was just gonna say, now that you got to this point, I thought it was interesting. The net reservations per property, that was an interesting piece where it was pretty much in parity to 2022, um, which just really indicates, like, in my opinion, is like velocity wise, like there isn't a slow in that, which definitely correlates to like some of the reports out there of demand being up or being, great. Because if it is, then obviously per property is getting there with supply increase, et cetera. But obviously the dilution of ADRs, is a force to be reckoned with. It's going to continue to happen if the velocity is still going compared to last year.
Yeah. Net reservations is such a difficult metric in my mind because, like, let me see if I can give myself a little bit of a annotation device. It it's really hard to look at on too small of a time scale because of the way booking windows work. It's like if you look at 2021, it's like, oh my gosh, we're way behind. But like all of these reservations go here in other
Yes.
years. You know what I mean?
Yeah.
It's like
Yeah.
this is like it's interesting because it tells a story, but it's hard to like think forward what's going to happen looking at this data. It's like, okay, people hadn't traveled in 2 years, so they bought all their travel, and then there was nothing left to buy. You look over here, it's like a little bit of the opposite. It's like, okay, people maybe came into the beginning there, they're like, oh man, everything's expensive, banks are collapsing, not buying anything, and then it's like, well, hey, those of us who are traveling are going. You know what I
Yeah.
mean?
It would be an interesting thing to actually overlay on the secondary y-axis of average booking window,
Mm-hmm.
because
Yep.
then it would mitigate exactly what you said there, which would be, hey, here's the velocity of the bookings by the creation date on the x-axis, but then let's see where they were actually, those big old spikes were actually, how far out were they booking?
Yeah. I kind of just want to look at it like annualized almost. Just three
Mhm.
bars, 4 bars. Same time as of this time last year, but
Yeah.
it is, I think it's a really interesting. This graph is excellent for telling you a story about kind of what's happening in the market. We see COVID ending. We see this trough where banks collapse, inflation's high, sentiment's poor, prices are probably too high in our market. We see some of the reaction and recovery, but it's definitely not like the sum of this isn't this. We
Mm-mm.
know that there's
Nope.
lower occupancy, and now we're kind of following this 2022 trend. And if we recall at the end of last year, it kind of surprises me that we had so much of this shock this year because these markets went through this last year. They're like, oh no, August and September aren't high season now that people have to go back to school. I thought more people would carry that forward, honestly. Um, but it'll be interesting to see if how steady this remains, because I do feel like the perception of like the market changing started last year. It wasn't a surprise, whereas it kind of felt like a surprise out here in spring where there's a big deviation.
Yeah.
This is almost like an emotional EKG, really.
That's true.
Yeah.
One note for everybody watching or listening there is that on these key data articles, they do a really good job too defining their graphs and some of their methodology. I mean, they got the calculations right there, which really I appreciate that, because in a day where there's so much data out there, it's like, just tell me exactly what your foundation is, so I can help assess my mind what's going on.
100%. Any comments on like the stay, Doug?
No, I thought the booking window piece was interesting, because they did talk about how booking windows have really shrunk. And you can see that. I mean, 2023 is below every other year in the last 3 years, 4 years actually. So it's kind of interesting how, to coin some of what you said before in the past, John, which is maybe there is some self-inflicted or self-created booking windows that people have done by this, getting surprised by the short windowed nature. I don't know that I'm convinced it's just because people are all of a sudden choosing to book in the short term. I have a feeling it's because the price sensitivity and the resistance to book something at a high rate is like, no, that's fine, I'll just wait until you drop it.
I would
Um,
really love to see a graph here that was the average posted rates of available properties 80
and then when
days
it
out.
just goes in the
Yeah.
dump, yep.
Well, or just at the same time, like we know whatever this average booking window is, how the average price is compared to year over year. My guess would
Yeah,
this would be the complete reverse almost. That 2023
yep.
would be the highest. I don't know if that's the case, but I think that would be pretty interesting to see.
Yeah, that would be good.
Um, Okay, let's go down to this section before we move on. I think this one's really interesting.
Yeah.
They're kind of giving us some high level macro stuff that's really fascinating. Doug, what did you think was the most interesting?
Um, for me it was just more confirming again on the travelers feeling that prices were too high. Just that's the second time in a row now that they've really kind of signaled that people are having um a sensitivity to pricing, which just really, if you haven't been paying attention to that or thinking about that, when you see that repetitively, it's a real thing, I think, and people need to, really take that in. Um, the second thing that I found very fascinating was the marketing strategies. So we are in a time frame right now where, you know, if people are being sensitive, which I believe they are about their prices, I think, we talked about this before we started recording, John, but people are going to be more likely to work harder to find the great deals. So in the marketing strategy side of things, you can have all of your OTAs, you can have all those things going. But the interesting part that I found there is that we have this group, the Gen Zs and the Gen Z travelers who are choosing the platforms that they want to have inform them about travel. And I found it fascinating that they really signaled this here, that a lot of the Gen Z and whatnot are looking at TikTok to inspire their travel destinations. So my advice to anybody would be is to start thinking about your marketing strategies to get to your direct platform, or even just getting some exposure about what it is that you're offering in accommodations and put it out on TikTok. I know it's something that's like, oh, TikTok, whatever, or, some of that stuff, but it really, I think, is something that's fascinating as it pairs with people's price sensitivity, and people actually shopping more carefully about their travel plans, going forward. So I definitely like that aspect.
Yeah, they mentioned 42% of Gen Z said that they would be receptive to learning more about travel destinations and opportunities on TikTok. That's a lot.
Yeah.
That's a pretty interesting market to do, and there's a lot of tools out there that I think it makes it pretty easy now to
Yeah.
do that. I don't personally use TikTok, but
I don't either,
I
actually.
get sent them.
Yeah.
uh, they definitely also noted that millennials like us are half as many are receptive. um, but I thought this data was pretty interesting. I think it's actually a little schizophrenic, honestly. Like people seem to be a little bit more bullish on the economic conditions, but they're still
Mm,
trailing on the travel stuff. The travel like is not well priced for them. I'll be interested to see how that shifts,
yeah.
in both directions, right? And again, just contributing a little bit to that volatility for the revenue manager. Conservatism might be the best route to go if we're really unsure about how all these different factors are actually gonna land.
Yeah.
Um, all right. Any last words on this great key data article?
No, not at all. I think we covered it. It was a really good one. It just
Perfect.
was good, like, reaffirmation of where we've kind of been talking about things in the past on the last session.
Yeah, I hope I'm glad KeyData does these. I find them to be really valuable.
They
So let's
are.
hop over to the Airdna, sorry, not Airbnb, Airdna one. I'll shrink Doug and I up a little bit. This one's pretty interesting, right? So first of all, we talked about a little difference in tone. The tone here is a little bit different. Breaks all-time demand records, and Phoenix beating the Heat. So
Yeah.
that's already a little different than what we were
Well,
just
and
reading.
two things to pay attention if you scroll back up there. One, I always look for a lot of these articles for relevancy on dates. So you can see the published date was August 13th. And if you look in the URL, obviously the URL is point blank calling out July 2023. So when we're comparing and contrasting these two articles, they are talking about pretty much the same time frames. And also they publish these right around the same time, same date. 13th, 21st on KeyData and 13th on AirDNA. So I mean, I know they're not apples to apples, but at least from the time frame that you think about mentally, people writing articles and doing analysis, if they're doing it around the same time, then that gives a little bit better baseline of a comparison.
Yep. This one's pretty interesting. This one's going to talk to us about record-breaking night sales. This is a very optimistic article about what's going on, and
That's
I
what I
think you'll
thought.
find that in the whole tone. I don't know who the general audience is for these. I think key data is definitely for PMs,
Yeah.
especially on the smaller side. My guess would maybe be that AirDNA is really looking for something more institutional. something more capital intensive, they tend to be. This is much more positive. You know, when you say,
Yeah.
hey, if you're a PM and you look at key data, you're like, things might be rough. But if you're talking to someone about like, hey, should I put money into this industry? You send them your Airdna and you say it's like record sales, man. Like where the demand is higher than it's ever been, which is it's not like they're both true, right? It just
So are
depends
you
on where you are.
saying so are you saying that this article is engineered for real estate folks?
It might be. I think there's value for everyone, but I do think that those differences are important to note.
Yeah, definitely.
Because it is true, right? Like I do believe, definitely agree that there's record nights sold. We just also know that there's pretty high supply, and they're going to go into that a little bit.
A little bit,
So
yeah.
this beginning's pretty interesting. They give us a few, big things. They do tell us some macro stuff. They're pretty bullish on the economy here. Jobs are strong. Inflation is getting closer to the target. A little higher this month because oddly last year it didn't raise.
Well,
They're a
they're
little
even
bit more bullish
bold
here
enough
than
to
I am.
say that no signs of a recession.
Yeah,
And I was like,
I,
whoa, I don't know.
I think it's pretty bold. I mean, there's a lot of personal stuff here. I think the Fed is
Sure.
not done. Like, I think they mentioned somewhere in here that they think the Fed will be done with their inflation hiking, and I don't think that's true. But
Yeah.
I don't know enough to really be an expert in that. I'm here to talk about vacation rental
Yeah,
revenue.
that's true. Me too.
Yeah, here it is. Pausing or ending its rate hike regime. I just don't think that's true.
Yeah.
But now we've got some of these STR things. So even though it's pretty big there, RevPAR's down, so that's kind of in line. Let's see here. So they're down 2.3. And then this isn't in a percentage, but I don't know. It
2022.
looks like a little bit more than 2.3% to me. Let's see. What does it say here?
Uh,
Can you do that napkin math, Doug? That looks like 10% to me.
yeah, that looks about right.
227,
Yeah,
27.
10%. Yep.
So that's a pretty big difference in whoops, wrong article. That's a pretty big difference in RevPAR declining. So I'm not sure.
11.8%.
Yeah, not sure the difference there, where that comes from. The actual numbers they're getting are pretty close, but there's a pretty big difference year over year here.
Yeah.
Available listings, huge increase. So there's that supply, right?
Yeah.
That's what we're talking about, right? And I think what we're talking about where like we can both say that demand is way up, but supply is also way up is these don't match like occupancy. Occupancy is down, but it's not down 12%. So there definitely is growing demand, but the occupancy has outpaced that. Or sorry, the supply has outpaced that. And in some markets that proportion is going to be significantly different. I'm not sure how they define demand nights, so let's come back to that one.
Yeah.
Um, they don't have near as big of a drop in occupancy this year. 1.3 versus like what do we have here? 4%.
But do you think some of that is a component of the structure of what Airdna is versus KeyData, with KeyData having actual real reservation data from PMs and Airdna kind of having more of a, I don't know, partnership or, scraping type of component?
I don't know. I mean, I think everyone uses a mix of data. I'm not exactly sure. That it could also be that key data is using a little tighter data set, like that
Yeah.
Airdna is broader.
Yeah.
Because I don't really know. I think it's important for us to know, what agrees and what doesn't. We both agree that they're down. There's a little bit different factor of up and down here, so we'll have to kind of decide what we think is more realistic. We also know that key data isn't going to be capturing what's going on in the hosts very much,
Yeah.
of which there's a large proportion in some of these markets, especially in cities in particular. So if you're a PM, your key data in your property management travel destination market might be pretty solid, but when we're aggregating these up to annual levels, I don't know what their penetration is for hosts in like these cities. And as when we get to this Airbnb article, they talk about like 90% of their listings are individual hosts, and their urban markets have grown substantially. So, I don't know. Like,
Yeah.
it is interesting though. We do know they both agree that it's down. Key data is definitely looking down more for the PMs that we work with. That key data might feel more like the reality. But we'll kind of have to just take a look at it. That's why we're looking at these, right?
Yeah.
They have ADRs being down slightly too, so that makes sense. And a pretty big increase of booked nights. Now, what's interesting to me I would be curious how the supply is calculated. It's
Right.
it can't be calculated on room nights because that would seem to correlate more directly with book nights. And since book nights is higher than supply, I'm just curious how those relate to each other. I don't really know.
Yeah,
Um,
almost like making sure that you'd have to normalize it for year-over-year change.
yeah. Now, what this could be is nights that were booked in July for future dates. Then that might make a ton of sense. These are actually two
Sure.
different time frames. Like this is what's available maybe in July. This is what booked in July, and we'll see here actually. Uh, right, one of these graphs is pretty good. It shows how much more booking has been occurring for the fall this summer. So that book nights makes a ton of sense. Um, so this next one, demand growth, let's see how they do that. Demand is the nights stayed during that month and nights booked. So yeah, okay, so this is kind of telling us, like you can see here, July 2023,
Yeah,
May,
orange is
June,
for anything
July.
in the future.
We're not we're seeing huge jumps in the booked nights over here. Those got to be occurring somewhere, right?
Yeah.
We definitely see some. I wish they had some year over year here. That would help us. Oh, this is a percentage, right? So
Yeah,
everything is
this
up, up, up,
percentage.
up, 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 up. Yeah, so it must just be gross, like just more nights are being booked in general. It'd be interesting to see how these kind of look year over year to see if these spikes are occurring in the same places.
Yeah.
They'll give us some good context here. KeyData, or sorry, not KeyData, AirDna has really good descriptions of what they're showing us. Let's see if we can find the stuff that's going to be the most interesting from the revenue management perspective. This, I think, is really solid. Whenever you're looking at supply stuff, AirDna has got really great ways of
Great
showing it.
stuff.
They've been tracking like every listing for forever, you know?
Yeah.
Um, so this is a great breakdown of just these like big jumps in supply uh, over the course of the last couple of years. And what's interesting too is like we're well past the peak of 2019.
Hmm.
And I think it shows just how much demand has also grown, even this year, where we're like well above how many listings there were at the peak in 2019. And even though occupancy is slightly lower, like rates are still remaining pretty high to the point where RevPAR decreases have really been mitigated pretty
Yeah.
substantially. This is an interesting piece to me
Jump.
in the
Yeah.
last 4 or 5 months or 6 months since January. Like how many listings came on board this year, right? That's really fascinating.
Well,
Um,
and they did kind of call out um that it was kind of like smaller cities. Um Small and mid-sized cities experienced the fastest and kind of like demand growth. Oh, sorry, that was on demand growth, not the supply side. That was bad on my
yeah.
notes. But the demand side was on the small and mid-size.
They do mention here that the supply growth is slowing. You can kind of see that in this line, and there's like a sharp increase at the beginning of the year and then it slows. So I'm just very curious how this is going to start to equalize, particularly next year. I
Hmm.
don't know that, we're coming into low season for a lot of people. We're not breaking this down by ski markets, and I would imagine they probably have the least supply growth. I mean, it's not like people are building millions of new houses on the side of a mountain all the time.
A little
I'm
bit
thinking it's a lot of
more
these cities.
difficult. Yeah.
Yeah. Um, so yeah, pretty interesting. They're going to go into relate the inflation situation to ADR. I think this analysis is interesting. I'm a little, you guys have heard me talk quite a bit. I think that a lot of our rate situation is actually not reacting to the market fast enough, which exacerbates the rates situation a little bit. Um, they do a pretty good breakdown here of the different kinds of markets um, in June and July. I do wish they'd show us some year over year here too.
Yeah.
That would be pretty interesting to me. But it looks like those small cities are the ones that are kind of growing the most.
Yeah.
Uh, but yeah, now let's scroll down a little bit. I thought the most interesting thing here in terms of a difference with the key data
Yeah. I saw that
was,
too. I was like, wait a second.
yeah, the analysis on Phoenix. Um, because if you recall here, they're not calling out Phoenix in particular, they're calling out the whole Southwest.
Southwest, but
But that's like definitely like the most
majority of it.
difficult region. Um, on the AirDNA one, we're basically saying Phoenix is super solid.
Yeah.
So demand increased the most, even though it was the hottest. Um, and it's off season. So that's just kind of interesting. So I don't know how to jive that really, the two pieces of data. I mean, I do in the sense that like
Well,
ag,
Like Coachella, is that a recurring event?
I don't know that it's in
Same
the
time frame?
summer. I don't know when it is. Um, I think this is here. Like this is definitely true. Demand for STR rentals increased the most in this market, 34%. I think what we don't see here is them showing us the supply increase specific to this market. Because
Against
what
it,
we've
yeah.
heard from people, like what I've heard anecdotally, is the two most supply increase markets are like Orlando and Phoenix, Scottsdale area. And so even though they may have had the most room nights booked increase, that got spread out over a way bigger proportion of properties, actually
Yeah.
resulting in lower performance for the individual. So higher performance for the market in top end, lower for the individual at bottom line. And I think that's a really important thing to think about when we're looking at data. We actually talked about this the same time when we talked about the Airbnb bust, which is like where is this data being sliced and for what audience is going to tell you a little bit more about how to relate it to yourself. It's not that the data is wrong, it's that you
No.
have to understand how to relate it to your own behavior.
Yep.
So I think that's pretty interesting that, and I think it's really a bullish sign that demand is increasing at such a high rate, um, and that supply and our own industry revenue management behavior is maybe influencing our success here. Because we also talked about, Doug, last time, uh, the hotel market in Phoenix they don't have the same story as us, that it's really been difficult for the individual PMs.
Right.
So pretty fascinating. They're giving us a little bit more here. And then their conclusion is it was a strong end of the summer here in July. So pretty interesting. This is the most interesting, I think, to me, and I definitely think a lot of PMs I've been talking to who've taken more conservative strategies agree, is that the pacing into the fall is much stronger coming out of summer. So when
Yep.
we look at like that first data point here that was like nights booked increased, the actual booking season for July, I think, is probably one of the strongest because we booked short term for July, which we didn't do. People started booking earlier into August, and then they started booking into the fall because they've switched. Many people in the markets have started to switch their rate strategies to a more conservative rate strategy.
Yep. Yeah,
And
I would say that the fall has been picking up a lot more aggressively than it has before. And in some ways, if you guys haven't been doing it, I mean, I understand key level versus multi-unit and other components of business models, but like building a base further out is the best path to strengthen it to prevent you from anything in the short term. And I know, John, you say that a lot too, but making some incremental small changes, even if you're key level, can really help you honestly strengthen out that longer booking window.
yeah, totally agree, Doug. So we'll link these in the thing. The KeyData one and the Airdna one, both real good. They also both put these out once a month. So they have the previous months. We'll continue to talk about them as they come up because they're just really, really interesting, useful kind of things to use, things to share with owners, give people an idea what's going on. So let's hop over to this next one. Airbnb accelerates supply growth. There's that supply word again. We're getting bigger, guys. And looks to expand beyond the core service. So, Doug, what did you take out of this one that was really interesting?
Um, I took out of it some things. I've also been hearing some rumblings that the Airbnb has kind of shifted their focus from more of a demand generating to supply generating. And I think this just kind of echoes what I've kind of been hearing some rumblings of. And in so many ways, like, I did see, like, they're doing some bunch of international expansion. They're looking at like experiences. They're kind of diversifying some revenue streams. So I guess a lot of the foundation, this article kind of helps solidify some of those questions I had in my head of like, well, are they really putting a focus on supply? And it seems like it might be for a, little more value add for the brand to try and, bring up more, rather than it being just like, we need a ton of more supply. I think the basis for it probably is because they're wanting to diversify some revenue streams and they need more supply and they need more things to actually do that successfully, is probably what it is. But to that point, I do also have some concerns about what that's doing to everybody's, business and standpoint of trying to actually, execute on ADRs and try to do the best thing they can, because it's just diluting things by letting it more in there. And then also, comes into play too of some of the regulation and legislation stuff too that they are responsible for with some of the local governments and stuff to try and help make sure that the right supply is being able to get on there and not having it be something that people doing illegally, that kind of stuff. But yeah, that was my
Yeah.
biggest takeaways from it, is just that it seems like they're trying to do something that isn't just correlated to the core business model of getting more supply in that way. I think they're reacting to needing to diversify some things.
Yeah. I think my biggest takeaways from this article, and it's really good, Phocuswire does a really great job of giving us
They do.
some good it's a nice, concise article. Um, they give us some great statistics, some great quotes, and just a little bit of exposition. It's really solid. My takeaways are just a few things. One, that Airbnb bust thing is it's just wrong. That
Yeah, it totally
whatever
is.
they were doing in that data, all the rooms and that kind of, it's just wrong. It's not correct. Like, we know things are maybe tight, but the industry itself seems very healthy,
Yeah.
right? Like, the industry as a whole seems very healthy.
If it was, it
19,
would be the inverse, right? They'd be more focused on demand.
yeah, I'll talk about this. I mean, the supply thing for them that's a big supply growth, and when you also take into account that like 90% of its hosts are individuals, that means that the supply that they're adding really is adding supply to the markets. It's not just like, if this was like 90% professional, we know that people are trading properties, right?
Right.
Um, they really are bringing supply into the markets. Um, in some cases, that's bad because it's competitive. It makes it more competitive if the occupancy is low. It makes it more competitive if your pricing strategy is bad. But it's also kind of better because you do have an opportunity to stand out. It also means that you're bringing people into the industry who you might be able to manage for in the future. Um, it gives the consumers choice. Those are all good things. So I think in the long run, this is good. The strength of Airbnb is actually beneficial to this industry, is having another solid channel, especially one that does so much marketing to fresh
Yeah.
customers,
Yeah.
right? They're not just marketing to travelers, they're marketing to people to be aware of travel. And that kind of marketing is like some of the best things I think they contribute to the industry as a whole. They talk about that a little bit in here. Um, the other thing I thought was really interesting is this focus on non-US areas.
Hmm.
I think that's going to be really beneficial for them and for the industry as a whole. It makes it difficult for us to understand where their supply is going, but they obviously think they have a lot of opportunity in other countries, which is great. I didn't actually realize how little penetration they had in some places. You know what I mean?
Yeah.
Because it's
I
kind of
didn't either.
ubiquitous here. Um, Doug mentions this, the other categories that they're doing. I thought that was pretty interesting. I didn't know that they paused their experiences, so I think that they have an opportunity to really be strong there. My hope is that if their experiences thing can really take off well, that they start making partnerships, or that there's some companies that actually, just like there's all became when Airbnb hosts started coming on, then there's all these kind of like not true property managers, but kind of like Airbnb specific property managers that become true property managers. I'm hoping that there's the same kind of things with their experiences. Like, if they build a good enough distribution platform like that competes with Viator and these other things, then there's going to be people who connect your properties to those and organize it, and everyone can make a little money on them. Because we know that ancillary services, biggest opportunity for money, hardest thing to operationalize right now, that
Yes.
we really can't compete with people who own real estate the same way, you know?
Yep.
So that's really interesting long term for us to think about how, the success of this distribution system will actually enable us to link our stuff to it, or maybe even just offer it. Like, if you have a PM company and you know that like your brother Joe is like a killer, mushroom hunter in the woods, and he already works for the company, like, you might be able to take advantage of that distribution engine yourself.
Yeah.
Kind of fascinating. So the next thing too is the midterm stay. I don't have too much to say about it, but I think that's going to be strong. I really hope that they create some features. There's currently no good automated platform that can support the difficulty of the lease situation.
Yeah.
So like 30-day stays, 31-day stays, you're actually a tenant and you're supposed to be on a lease. And people who do it kind of operate in a gray area. of them taking the risk of evicting, but having a system that actually like did that paperwork for you and that insured you against losses for eviction, I think would really enable this space to explode. You know what I mean?
Yep.
And also handled the background check stuff that you sometimes need. If they were able to do that, then they're opening up this space completely. And there's a huge benefit for our industry in that we're the tech stacks that are connected to it already.
Yeah.
So we're the ones who then get to massively expand it. So I'm really excited to see what they do here. Last kind of piece I had, and then I'll let you talk a little more. I don't care about the generative AI stuff. This just here, like this is why I think the that Airbnb Bust article is just total BS. I mean, they're raking in the cash. They have profitable EBITDA margin. They're growing a ton. Like there's no Airbnb Bust at Airbnb.
Yeah.
You know what I mean? Like it's just hands down shows you right here in their financial information. They're going full steam ahead. And I really like that they're substantially increasing their marketing funding because like I said, their marketing benefits all of us, right? Every time
100%.
they put Airbnb ads out, they're telling people to go travel somewhere and convincing people to do it. And that benefits all of us. So I'm really, really stoked, really bullish on that.
Yeah, and it's also in the way that they're inspiring travel in a way that is aligning with what everybody wants. I know Booking.com and Expedia and everything else does, similar things or whatever, but there's just a different feel that Airbnb does from their marketing that almost in some ways you argue and say, well, even if you don't like Airbnb as a platform to book on, it inspires people to go onto Vrbo or go onto Booking or somewhere else and book. And that's just something that is, like you said, it's really good for everybody.
I think the thing that Airbnb does in their marketing that's so good and unique and good, like unique and good for the industry is they market so early in the funnel. Like they market to the customer who hasn't decided to travel yet. Right? Like Booking.com's like their marketing is like, oh, you have to travel, you might as well get the best deal. You know what I mean? Like hotels.com, you're way down the funnel. You already have to be somewhere. Airbnb is like, hey, have you ever looked at these weird houses? You could go there.
Yeah.
Like they're the only place you go just to look at stuff. I think that was like their number one innovation is in their marketing is that people go to Airbnb without an intent to travel.
Yeah. Their original purpose wasn't because I had a need or I had something to do. It was actually just something that was discovered on that materialized the need,
Yeah. So they can keep spending $500 million on that for us. All right, Doug, any last words on Airbnb?
I would just echo again the profound thing that I think I just realized with this after the with us just discussing it is that really if it was Airbnb bust, do you think they would be investing in supply? No, because supply does not have an immediate gain in revenue streams. If they were busting and they were having issues, they would be putting everything they could in demand and getting more qualified buyers to purchase right now today. If they're investing in supply, that's a longer term strategy that doesn't materialize instantly.
Yep.
Now I know there's a lot of people that say, "Oh, that's not necessarily true." People could, if something's sold out in a market or something, and they build more supply, they're going to get whatever increase in bookings. It's like, well, but the whole point is that it's a lot of work. I think most people who are PMs understand it is really tough to build a listing, get it live, have it be successful, check all the boxes, make sure it's doing what it's supposed to do, receiving things in. So increasing supply as a channel it's really a difficult task, and it's not something that it yields right away. So
100%. Okay, let's do this last one. I'll change the shape of Doug and I. We're not going to spend too much time on this one. This one's pretty light one. It's from earlier in July.
Make me thinner?
Sure, Doug. There you go. That's as thin as I can get you. This one, I just thought it was interesting because it's in, Business Insider, kind of a major mainstream media, and so they're responding to something. It's, they posted at some random time, so I don't know what time that person's on. But a certain type of vacation home is struggling to stay booked this summer. The outdated mid-tier listings on Airbnb and VRBO. So I know you guys can't raise your hand, but seriously, raise your hand if you had to talk to an owner about like updating their listing because nobody will book it. So this article is just talking about that. They do bring up a few things that I thought were really interesting. Because they do kind of talk about like uh they kind of talk about that the high level stuff is doing really well, and actually the low level stuff is doing really well. It's just this kind of mid level. And where I think they point something out that's really odd to me is, let's see if I can find it. This is luxury being high. Yeah, that makes sense. Looks great. Um, they mentioned something about how the middle listings have poor aesthetics, which I think ties into that kind of Airbnb marketing for travel, right? People really are buying something aspirational now. You've always kind of done that with travel, but especially with vacation travel, you want to buy somewhere that there was a great quote in here. I don't know exactly where it is, but you don't want to buy somewhere that looks like where you live. You want to go somewhere that's better than where you live, right?
Yeah.
I thought that was really interesting. But they also have this like weird part here where they said they pair it with like, yeah, there's these poor properties, but they won't budge off the price. And I actually think that's the most important aspect of this. The host is stubborn about the price.
Yeah, they just called it out. Maybe it's not about going somewhere that's better where you live. It's something that is more different than where you live, right? And something more interesting than where you live.
Yeah. I just think that really the simplicity of this is there may not be mid-tier listings.
Mm.
You know what I mean? Like there's like these mid-tier listings are actually low-tier listings that are trying to price higher than their value.
Oh, interesting.
Because this is the key, right? Because if you think about it, in a lot of markets, it's going to depend on what market you're in, right? But I bet you this guy in a mainstream news media is probably talking about a city. He's been talking about Phoenix. Um, if you look at the new builds that have been occurring there that have been converted to Airbnbs, like Phoenix, Nashville, all these cities, the mid tier now is a nice modern style. So the dated stuff is just no longer mid tier. It may have been mid tier 10 years ago, but it's moved into the low tier because the mid tier is now a clean modern style.
The
Right?
standards have increased, right? You're not
yeah.
you're not getting the old golden oak 90s wooden cabinets that, used to be plagued in the 1990s,
Yeah.
You're getting whites and grays and more modern colors and styles.
And I think the key here is that like if you're in a traditional vacation rental market and there's a lot of diversity of properties, you can do this. You just have to recognize where this fits in the pricing. But if you're in like a market that's got a lot of new build or a city and you're an investor, if you're going to get a property, you have to bring it up to standard aesthetically.
Yep.
You can't not do that, right? If you're in a city in particular, all the new builds that people are just lightly decorating and putting up, they look modern. They look like they're above mid-tier because the mid-tier is just dated. What we called mid-tier is just low tier now. Like when you think about a hotel, a low-tier hotel is dated. A mid-tier hotel is like a freaking Residence Inn. Those are not nice. And they're modern. And hotels have to keep their, like even the mid-tier hotels have to keep up their modernization standards pretty strongly. I mean, it's very expensive for a hotel to do that. So yeah, I just think it's interesting. I think, if you've got a mid-tier, if you're calling something mid-tier and it's dated, it's low tier.
Yeah. Well, I mean, you could also update it to go really far retro back, like this little picture, and make it like it's Ron Burgundy's home or something.
Yeah, that's what I was thinking. This picture is actually really nice.
Yeah.
I bet you if you made this funny, you could get college students to stay there. Like, if you're gonna be if you're gonna be like dated, you need to be ironic.
Dated equals ironic.
Yeah, like if you're unironically dated, you're not getting booked. This is the best part of the webinar. We'll see who makes it this far.
Yeah. If you made it this far, quote what we just called this room as being Ron Burgundy's.
Yeah, comment back.
Ron Burgundy's
if you're unironically
college house.
Yeah, if you're unironically dated, you're not getting booked. Quote by Ron Burgundy. Put it in the comments for us. Okay, guys. Well, I think that's all. We've been talking at you for quite a while. Hopefully you found this interesting. We'll be back in a month or 6 weeks or so to kind of talk about, what other interesting articles we see. If you see any, feel free to send them to us. Doug, you want to give us a little like outro for yourself, and then I'll reintroduce myself and we'll head out.
Yeah, so I'm Doug, head of commercial at Romy. I got a lot of experience in the space. And realistically, I just, these are fun conversations because they're insightful for me in the moment. But I think that hopefully this helps everybody who's either aspiring to understand a little bit more about the space or the revenue management. But we've got a lot to cover here. And please let us know if there's anything you want us to look at or discuss or talk about. We'd love to do it.
Awesome. Thanks, Doug. Likewise, my name's John DeRelay, head of revenue management with Wheelhouse. And, just enjoy having an opportunity to hang out with my buddy Doug, talk revenue management, talk revenue, and hopefully help people, get some interesting ideas, learn what's going on. Also learn how to read some of this data too, just by hearing people talk about it. So appreciate your time, and see you next time.
Thanks, everybody.
Bye.